the one simple decision that you can do in order to become profitable when you are trading is just trading with the trend. It just comes down to that. If you just follow that alone, right, and you don't try to oppose the trend, then I'm sure that most of the times you are going to be winning, right? So I'm just saying overall, right? It doesn't matter which strategy you are using, right? But if you just follow the current trend that the market is going, then I guarantee you that is the best decision that you can do for yourself, right? So what do I mean by trading with the trend, right? So let's take for example over here, right? So in this setup over here, right, we're going down, right? Blah 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 blah. We're continuously creating a series of what? Lower lows, lower high, lower low, lower high, lower low, lower high, right? So lower low, lower high, right? So this means that we are in what? In a downtrend, and you can also determine this using the moving averages. Let me just insert another moving average that we can use to determine the trend, right? So let's use the period 200 exponential apply to close, then use this, so like a variation of paper. So over there you can use your 200 moving average to show you the trend, right? So you can, if you are using the moving average, you can use either this crossover here, right, waiting for them to cross, or you can just simply say that whenever the 200 moving average is on top of the candlesticks, then the market is going down, and whenever the 200 moving average is below the candlesticks, the market is going what? Is going up, right? The 50 moving average, this is the 50 moving average, by the way. You can also use it for your trend, but the 50 moving average, I also like to use it for my entry, right? So it also shows the trend, but as you can see, it also gives very good entries, right? So I like to use it for my entries, right? It's telling me where the trend is, but I like to also use it when I'm trading with the trend, right? So this is the only thing that you can do, right? So you check your trend on the high time frame, right? So let's check let's change to a 50-minute time frame, right? So as you can see over here, let's say maybe we are using what? Which strategies can we use? Let's say price action, right? And this moving averages over here, right? So if you're just trading with the trend, if you just follow over here, right, the market is what was going down a little bit over here, then you started what? Breaking structure to the what? Breaking structure to the upside over here, right? So you just have to look where the break of structure is, right? So we've got a breaking structure over here, creating a high low. This was just equal, then created another high low, blah blah blah, right? So now we are going up, and also if our cross, the candlesticks are below, the candlesticks are above the 200 moving average, so we're in an uptrend, right? So if you are looking for entries using the 50 moving average, okay, you've got an entry over here, one, got an entry over here, two, got an entry over here, three, right? So you've got three entries already. And if you're using price action, let's check using the zone flip, right? So zone flips, right, over here we've got this resistance over here. It gets broken, the market pulls back to it, right, starts ranging a little bit, right, and you eventually, if you hold that trade, you'll be in profit, right? We also have something like this sort of block over here, so that's a support area over there. So if you held over here, it's just the same as our moving average, you'll be in profit, right? And maybe let's mark what this area over here. Yeah, using using the zone flip strategy, that wouldn't be possible. You wouldn't have had our entry over there, so we shift down, we induce what our trend lines, right? So right over here we've got what? A trend line breakout, and so like a retest over here, and on that engulfing candle, so if our 50 moving average sitting there, right, and a little bit of something like what, like almost an order block over here, right? So we are testing that, and we could continue going what? Going up, right? So you are just following the current market trend over here. We're just looking for what? For selling setups, and as you can see, if let's say maybe you got into what? Into, let's say, this trade over here, right? Over here, maybe you entered a little bit too early, right? Maybe you entered over here, but if you as long as if you're trading with the trend, you at least you'll be have a little bit of a guarantee that the market, even if the market you are in loss right now, but there's a little bit of guarantee that the market will what, might just continue with that trend, right? Rather than, let's say maybe you are over here, right, and you mark this point over here. Let me take this, right? So okay, let me just see if I can drag this. Okay, so you got something like what, like a resistance over here, right? So most of the times people are going to say, it's going to form an M, blah blah blah, it's going to continue going downwards, and they want to get that sniper entry. You bear lesson to others, right? So, and you start seeing the market. Usually you see what you want to see in the market, right? So you start seeing an M over here. Maybe you start seeing this M over here, and you want to enter over here when you think that there's been a breakout of the neckline, but the market isn't broken what, this structural point. This is the low structural point, or even this one is for better, right? So you have to wait for the current market to break that structure, right? So this I wouldn't consider it. I will start looking for maybe this over here and this over here. If this gets broken, then I know that I'm now in a downtrend, right? Same as for this example over here, right? If this low over here, the previous low before the next one, because this one didn't create a high, right? So this one, if it gets if it had been broken, then I'll start looking forward for my selling opportunities. But over here, the market hasn't broken past these points over here. So as you can see, you enter for your sale over here, the market pulls back on you, you lose a lot of money, and now you see another M over here saying, yeah, maybe it's a double M, it's a 2-2 leg, right? So that's so like BTM, MTMs, you don't have to worry about this. But maybe you're now saying that it's just an ugly M, whatever, and you enter again, right? And you get wiped out again, right? So if you just follow the trend, right? Or if you want to enter for that sale, then I encourage that you wait for a proper breaking market structure until you look for your sales, right? So let me just look for an example where this is clearly what this is clearly explained, right? So let's take this over here, for example. So let's say maybe there was a resistance over here that was marked some over there, right? And you see that the market is a little bit slowing down momentum, whatever, right? And you want to see this M over here, and you see that M over there, right? And you enter maybe what, or somewhere here or here, I don't know where you enter. After entering, the market consolidates, so like giving you hope that maybe the market wants to respect it, but it just wants your stop loss, right? So after your stop loss gets hit, then now we've got the proper breaking market structure, right? So if you had just been patient enough to wait for this breaking market structure over here, right, this breaking market structure over there, and waited for the retest of the order block, there's an order block somewhere over here. Let me just clear this and draw a proper, something that's proper, right? So over here, we've got what? A breakout over here, right? So this breakout is breaking what? Quite a few lows, right? So what this low, all these were broken by this move over here, right? So now we want to look for sell opportunities because that's where the current market trend is, right? When the market pulls back to your order block, right? You see this inverted diamond formation, right? And the next red bearish candle, right? And it's large. So this is an evening star formation, right? So obviously you entered right there on the third candle and you hold, right? So you just have to wait for your proper breaking market structure for you to look for those trades, right? Rather than wanting to anticipate what the market has not yet done, right? You want to anticipate that yeah, over here the market is likely going to form a W because you want to buy and you are anticipating that the market wants to form a W over here. Don't lie to yourself. The market just shows you what you want to see, what you think, and you think, the market is overextended. It's oversold over there. It's the RSI is showing that it's oversold. I don't like the RSI oversold levels, by the way, because they just lie to you. Right? So over here, seeing the RSI is oversold, market is overextended. Yeah, now we have to form our W. And when you see this W, something like this W over here, you enter and you get stopped out. You see another W over there, you enter and you get stopped out. Unlike just waiting for this breaking market structure over there, right? We've got a breaking market structure and a retest to our moving average, and you now get proper entries that are in line with the trend, right? So you just have to be patient to wait the for you to show for the trend to show you what it plans, what it wants to do, and then you take those entries, right? You don't have to think on your own. You just have to react with what the market is doing, right? So there's that concept of people also thinking that they are fish and they want to go against the current, they want to go against the trend. You die a fried fish. Just flow with the trend, right? And that will help you. That will help you very much, right? So if you just flow with the trend, don't be a fish, don't be a stupid person. Just flow with the trend, and you'll be profitable.